So life insurance, everybody loves to talk about life insurance, right? But it's the key part of a well thought out financial plan, financial strategy. But so many times you run into people, and I don't know, Wendy, if you've ever seen the movie Groundhog Day with the insurance guy that's trying to track down Bill Murray and get him to buy insurance. And it's just, that's what, it's just like, it's cringy, right? It's like, and nobody likes to think about when they're not going to be here, but it's such an important part of the plan. And there's a lot of different choices out there. And you've got some gurus that are on the radio that say, you got to do everything in this bucket. And why I think that's a total, I'll just say it's misleading. Let's just put it that way, because there's a lot on the other side that we see when we talk to clients that are in their 50s and 60s that followed that advice, because some of those people have been around since the 80s, and now they're going, damn, I wish I would have done something else because some various reasons. So let's jump into kind of the most common that most people have, and that's the group life stuff. You get it through work. I got plenty. I don't need it. And I guess that's the question. How much do you need, right? What's the formula? Is there a formula out there? So, Wendy, what are your thoughts?
Yeah, we talk to people, right? Every time we sit with a client, we go through and ask what they have in life insurance or, disability, things like that. And I would say, like, more often than not, all people have is their group term. And so through their work, and they feel like they're good with 2 times their salary, right? And
if that, if that, a lot of times it's just the one times base salary, because that's a lot of companies supply that, right? Provide that through your work benefits. You can opt in to buy more, but I like you. I'm kind of surprised at how many people don't even do that. But you look at group life insurance, and that's it's something that the free stuff, take it, man. It's free, right? And it's added insurance, but a lot of people don't even understand how much they need. They think, okay, well, I'm making 80, 90 grand. That's plenty, right? That's going to pay off my bills. And it seems maybe depending on where you're at in your life cycle, like a large sum of money. Right. But there's a formula out there called dime, like a nickel and a dime. And so you add all those numbers up, and that's basically how much life insurance you need, approximately. It's kind of a swag, right? But you look at, what does dime stand for? So D stands for debts. If you're married, you got a family, you don't want to leave the debts behind, take that opportunity to pay off your debts. So that's the D, right? And then the I stands for income replacement. That's the big part of it. And typically when I sit down with clients, I look at 75% of the income for a period of 5 to 10 years. If they're young and just starting out, no kids, 5 years. If they're married with kids, hey, I've got plenty of responsibilities, that's going to be 10 years. And then empty nesters on the other side of it, that's going to be somewhere in that 7 to 8, in that, depending on their specific needs. But that gives you a good kind of range. So that's the I, and that's the big. And again, 75%, not 100%, for 5 to 10 years. And that's for each spouse. So then the other piece is the M, that's mortgage. A lot of people overlook this. Or they, have somebody knock on their door when they buy a house. They start getting all this solicitation for mortgage insurance. My opinion, don't buy it. It's crap. It's high-priced term insurance is really what it is, and you can do something else with it and get your mortgage covered much cheaper. Typically, not all the time, but typically than you get in those mailers in the mail, because you got to pay for that marketing. But you don't want to have that mortgage left behind, because you think about it and ask yourself this question: if you're listening, if something happened to my income today, could my spouse afford to keep the home? And, Wendy, we see it all the time. And when it comes to kids, you got to think about that stuff, right?
Yeah. Yeah. And, to that same, token, you talk about that with maybe if there's one working spouse, and some people might think, oh, my wife is home with the kids, and so she doesn't need as much insurance. Right. But like,
or any,
if something happens to her, I'm the one that makes all the money. I can still pay all the bills. But they're not thinking about that's a full-time job you've got in that house.
Yeah. Yeah, ladies are stay-at-home husbands. Don't sell yourself short, man. And they need to understand. I always joke with that because, typically it's, the working husband, if you will, in a traditional setting. will say, well, like you said, she doesn't work, so we don't really need anything for her. I'm like, okay, well, who do you want to have move in with you then? Your mom or your stepmom or your mother-in-law, excuse me. And they kind of look at me funny. I'm like, well, somebody's going to have to come in and do all that stuff that they're doing because you're going to be working full time, and you're going to need to pay somebody to do it. And then all of a sudden, the light bulbs go off. But not to mention, if you can't afford that home with one income, and you got kids, the kids are going to lose a parent in that awful situation, right? But they're also going to lose their entire safety network, their network of friends and family, because you can't afford the house. You're going to have to sell it and downsize. So that means the kids are going to get pulled out of school and go into the next school system or, wherever, right? So they've got to, deal with a stressful situation already and then add the stress of moving schools and trying to make new friends on top of it. So that's the M. And then E stands for final expense. Usually about 10 to 15,000 is a good estimate. And then educational needs. If you've got young children or something like that, and you want to bless them with paying for college or whatever the case may be. So you add those numbers up, that DIME, and that tells you how much insurance you need.